Santam is a short-term insurance company focusing on personal and corporate markets and has a market capitalization of 21.5 billion rand. It was founded in 1918 in Cape Town and is the short-term insurance market leader in South Africa. It has a dividend yield of 3.4% and trades on a price-to-earnings ratio of 17.3. Paul, a big leader within this industry.
Yeah,
right
it's
now.
got like a 22% market share, and it was because, as you pointed out there, it was established alongside Sanlam, which does life insurance, and then the short-term insurance is car, motor, and all sorts of other risks. By the same sort of founding family of companies, at various points it's had a close or otherwise relationship with Sanlam. Currently 56% owned by Sanlam, but still listed on our market. It's got a big market cap. And the reason they did well was in the sort of 1970s and 80s, they invented, you know, the yellow umbrella policy, which was like the multiplex product, which meant that you got the pool of risk with your car and your home goods and all that. Sounds like it was a revolution at the time when they introduced it. I mean, understand the model is, as Erbrand says, they collect the premiums, they maintain a float in order to meet their ongoing claims. They invest the rest of the capital. They're obliged by law to carry a certain amount of capital so that they can always be good on their stuff. And they make money as a function of their underwriting margins. What that means is the relative relationship between the premium inflows and their claims payouts. And there are times when the underwriting margins are good and fat, but then there are also times when, you know, it gets very competitive and people want to change and so on and so forth. So it kind of comes and goes in cycles. And the worst thing that can happen is, as he says, that you have a hailstorm that smashes all of the cars on the East Rand.
Yeah, indeed.
You know, that costs just fortunes.
Indeed. And when you're looking at that PE at 17.3, like you were saying, your comment a little earlier, they're looking pretty pricey right now.
Yeah, look, I think it was one of the best performing stocks over the last few years. So it's done brilliantly, but at 170 Rand, it just looks a bit pricey for me. And I think on cyclical earnings, and you saw its first half earnings were actually about 29% lower than the previous year. So that doesn't bode well for me for the full year. And I think that would probably put this company even at a higher PE multiple. And if you have some other factors playing along, you might see this company being very expensive. And going forward, you'll probably see market prices going down.
Paul?
I like the management team. I mean, Ian Kirk is a fabulous guy. He was previously at Capital Alliance, briefly at Liberty, and now he's the manager there. So very good, experienced operator. Remember, Santam is mostly focused on the broker market. I think they've got like 7,000 brokers. And as you know, with insurance, specifically for motor and other forms of insurance short-term, there's this big dichotomy between insurance which is sold through the broker network and that stuff which is now being increasingly sold direct through call centers and through the idea that, you know, you can phone and speak to the person and you can cut out the middleman. And then the brokers say, no, but, you know, you need a good broker because if it all goes wrong, this man or woman is going to bat for you against the insurance company, blah, blah, blah. But, I mean, that is Santam's game. That's their strength. And remember, it's not only personal lines, it's all those corporate lines of business. So it's business insurance, which is very profitable. And then, you know, all sorts of hybrid type stuff. So if you've got some funny thing going on, you can go to them and describe your business risk such as it is, and they'll, you know, write a policy for you. So you can get insurance against getting a hole-in-one at the golf course or, you know, your soccer player's leg, all that sort of thing. You know, you can go to them. And that can be very good margin business, but it can also, as we saw with AIG in America a couple of years ago, you can be careful you don't take the whole risk thing too far.
So where to from here for Santam, Erbrand?
Yeah, look, I also think it's a great player in the market. I think it owns about 22% of the market, so it's certainly the biggest one in our market in the short-term insurance game. But certainly, I just think it's a bit pricey at these levels, and you'll probably look for a great pullback before you would enter it again. And maybe if the market corrects, that you'll probably see Santam correct as well, because their pool of money is market related.
And that's when you'll get it.
Might look at it if the price is right.
Okay, hot or not in this one?
I'm going to go for not hot, just too pricey at the moment.
Paul, hot or not?
Yeah, I'm a little bit the same, because you can see that chart behind Erbrand there. You know, it's really done well for many years. So it's probably due for one of those, you know, years with underwriting margins don't go well, the market doesn't do well, and everything ends up collapsing. I always say that these insurance companies should really only be owned by themselves or by each other, because they can soak up the earnings volatility that comes and goes. The only people who should buy them, private investors, are people with a very, very long time frame. They're prepared to put up with 3, 4, 5 bad years and hold them all the way through for the super profits that they make in the good years. So for me at the moment, priced where it is, positioned where it is, I'd say not hot.
So 2 not hots on Santam.